Hey guys, Rajiv here from Financial Hub India. So I welcome you again in the fundamental course we are doing here. And if you're interested to check out the advanced level courses, then please go through our website www.financialhubindia.com. You can also contact us in financialhubindia@gmail.com. Also, you can get in touch with us in the WhatsApp. To get the WhatsApp number, you will have to visit the website. Then you can knock us in the WhatsApp also. Now, let me tell you about the purpose of this course. This entire course is developed based on the Indian stock market, commodity, currency, as well as for trading the Forex market also. So, other than this, if you know the concepts of the price action trading method that we cover in our courses, you can trade any form of stock market or commodities market, currency market in the world. Particular market is not a limitation for you. So, even though you are not trading the Indian markets or you are not trading the global Forex, and let's say you are trading some other markets in the world, still this course will be helpful for you because the concept and the trading methods we analyze and discuss here will be the same for trading any form of markets in the world. So let's get started with the today's topic now. So before I start today's topic, let me talk for a few minutes regarding this support and resistance trading, and let us remind ourselves that why we actually need this support and resistance on the chart. So when we started our course, we started with the swing momentums, if you remember. All our previous lessons, lesson number 2, 3, and 4, was all about drawing the candlestick momentums. Then we learned how to draw the swing momentums, and then we have learned the different structure of swings, isn't it? So the purpose why we started with the swing momentums is that whenever you see a particular chart, your first job should be as a trader, you need to understand what structure the price action is forming in that chart. Now, what are the structure a price action chart can form? Any of the three structure, right? Either the structure is in uptrend, or it's in downtrend, or it's in a flat market conditions. So if we see the chart structure is in uptrend, then we can understand there are more presence of buyers in the overall price action. If we see the market structure is in downtrend, there are more sellers in the market. If we see there is a structure of flat market condition, then we know there is a presence of the buyers and the sellers both in the market. So it means, firstly, whenever we see the chart, we try to understand what the market is structured going on currently. Now, why that is important? Since market is all about buyers and sellers, and so to trade in the market, we need to know which party is driving the market, buyers or the sellers. So once we know the buyers are driving the market or the sellers are driving the market, or it's a neutral position now, both are in equal force, then it becomes easier for us to plan next. So the first step we always take is finding out the direction of the chart or understanding the structure of the market pattern, right? So indirectly it means we are identifying the strength of the buyers or the sellers in the market. And that was the reason why we learned the volatile and non-volatile trends and moves. So after finding the direction, now we know which party is leading the market. Now let's assume it's an uptrend going on. So the market structure we got is an uptrend. So it communicates with us the buyers are leading the market. Simple. Now, if the buyers are leading the market, then this is for sure we are not looking for any selling opportunities. We are not going to sell in the market. We are just going to buy in the market. We want to be with a group who is really making money in that market structure. And here in an uptrend, it's only buyers who are making money in the market, in that structure. And so when we have decided to buy only in this market structure, we will be buying where all these buyers were buying, right? And now how we find where all these buyers were buying? Drawing the support levels, because support levels are nothing but the reactions of the buyers in the market from wheresoever price is pushing up for one time, two time, multiple times. So how many steps you have done? Understand the market structure. If it's an uptrend, then draw the support and resistance levels. And then the third step is look for buying opportunities on the support levels. Now these are the three steps when it's an uptrend. When it's a downtrend, what do? Since it's an uptrend going on, so we see the market structure is in down move. So we like to sell it. So here we can see the sellers are more powerful in the market than the buyers, isn't it? Since we can see sellers are more control in the market, then we want to join the market with those guys, those sellers. And we'll never try to buy anything in that market structure, and we always will try to sell something. Wherever we see selling opportunities, we'll do that. Now, where we can find the selling opportunities? Where the existing sellers have already sold. They have already shown us which are the levels of their preferences in terms of resistances, minor or major, right? So whenever we see price reaching to a particular resistance in that downtrend, we will go to that level and try to have some selling opportunities and join the ride with the sellers. So this is the condition when it's a downtrend. When it's a flat market, what are you doing? We see it's a neutral condition with the buyers and sellers both. So we have a support level in a flat market and we have a resistance level. It's a range we see generally in a flat market. So in that range, when it reaches to the support level, we'll buy it. Why? Because we want to join the buyers now. And when it reaches to the resistance level, we shift our position from the buying to the selling situation. And now we want to sell on the resistance areas because we are counting it as a resistance area only when we have seen the sellers are in control in that particular area. We don't want to be with the buyers anymore, and now we want to leave the buyers and join the sellers from there. Hopefully it's clear. Okay, so in today's topic, so whatsoever I have talked till now, if I draw those things in a chart, then this is an uptrend, and in an uptrend we can see where the buyers turned up the prices from here, from here. So these are the minor supports we have, and the next time we see price coming back down, then we have a flip support here, isn't it? So you can look for buying here because the buyers have already shown their power when they have broken this prior resistance and trading above this prior resistance. They have overpowered the sellers. For the first time when price hit this particular level, let's assume this level is 500, there were sellers who took the control. But next time the sellers failed to take the control and the buyers overpowered them and took the control ahead and was able to trade above this 500 level. So in this area, the sellers are the losers and the buyers are the winners here, right? All right. So in a downtrend, same thing happens. You have the resistance area one, you have the resistance area one. So these are the points the sellers are giving you as a hint, right? The buyers were pushing the market from here, but the sellers took the control right from here and they started the sell-off. Here you look for selling opportunities wherever you find selling levels, which are resistances, and here wherever you find buying opportunities or the support areas, go on buying with them, with those levels. And when it's a flat market, we see the sellers are in control here at a level of 500, for example, and the buyers are in control here at a level of 400, for example. So when the price comes back to 400 in a control area of the buyers, we want to buy it with them. And when it goes back to 500, which is a controlling area of the sellers, the resistance areas, we want to sell with them. Right. Now in today's topic, what we'll do is whensoever price approaches a previous resistance area, like here, this is a minor resistance we have. So now if price approaches to this previous resistance area, then there is two possibilities, isn't it? Either the price will go above the previous resistance area or it will fall back from that previous resistance area, which will create a major resistance area. But in both the situations, when it moves up above the previous resistance area or it falls back from the previous resistance area, right here, it will create some particular structure, which we'll have to learn. All right, and which is a very important part of this analysis of support and resistance topic, and also which is very, very important to understand the price actions happening on the support and resistance levels now. So we'll be talking about different kind of structures in our upcoming a few lessons, and we'll try to understand what those different structures communicate with us now and how that helps us to understand the price action properly in the market. So the same situation is possible when price comes back down from here, and let's say price hits a support level. So here on the support level, like the resistance level here, we'll be seeing some particular structures here, and both the structure either on the resistance or on the support areas will be the same. Only difference is the structure taking place maybe in a support area or in somewhere maybe on a resistance area. That's it. But how it takes place and the terms and conditions of it will be the same in both the scenarios. So in today's topic, we'll just see one such scenario, and then we'll continue from tomorrow onwards the other structures. So we'll see a very simple one today. So let me draw a flat market where we see a minor resistance and then it becomes a major resistance, right? And then price again push back up, which we can consider a level of say 500, and we have those support levels here. Let's say this level is 400. All right, from 500 level of resistance, price again falls back towards 400, and this time it doesn't fall exactly on 400. It falls a price level of let's say 396, and then it moves up. So for last three times, if we see a price moved up from the level of 400 exactly, but on the fourth time here, price didn't fall up to the level of 400, and it just made a low of 396, and then it went up. Right, so 400 level is here, and this 396 level is here. So when you see price doesn't fall back to the support level exactly, but it moves up back again from a level which is near about that support level, very much close, which is the case here. The support level is 400, but price moved up from 396. So if this is the situation, so in that case, you will have to create a support zone here, considering these 400 and 396 levels. To draw this support further ahead, we'll be drawing this as a support zone and not as a single support line. So this support zone will have to be considered from here onwards when we talk about support areas in this range. The same thing can happen in terms of a resistance also. It price goes up, and this time it doesn't go up to 500, but it falls from 495 level. If you see this kind of conditions happening on the resistance area also, again you will have to consider this as a resistance zone instead of considering it as a single line of resistance of 500 level. So now we'll be saying this is a range of 396 to 400 area of support and 495 to 500 area of resistance. So here this is a chart of Mcx Gold for 22nd October 2013, and it's in daily time frames. So this range of gold is from 31,170 is a resistance to 28,317 of support. So here you can see we have a resistance point here, and we can see sell off from that particular resistance point, isn't it? And when price again pushed back up, it didn't reach the exact level of 31,170 here, but it pushed back up and has fallen just before hitting that particular level of resistance. To follow the resistance area for the next push up from here, you will have to create a resistance zone here, taking this point of rejection and this point of rejection together as a resistance zone. So what I'll do, I'll take another resistance point and draw a line there. So now I'll be saying 31,170 to 31,049. This is a resistance zone, and next time price goes back up, I'll start looking for selling opportunities within that particular range. Now in this range we have one support here and the other support coming up here, right, hitting the same level of supports for two times, which makes it a major support. But next time price moved up a few points above this major support. Price didn't hit the major support exactly and went up from a few points above the support level we have already drawn here. And since it moved up from hitting the level for a few points, you'll have to create a support zone here, taking this up move point from here. So now we'll be drawing another line here, and now we'll be saying we have a support zone here, and within this zone anywhere we can look for buying opportunities, and we have a resistance zone here, and within this zone we can look for selling opportunities. So now this is a chart for the copper. Now in copper here you can see price came back down here and went up, and next time also price came back down and it has tested the same level, the exact level of the support what it was before, and then it moved up, right? So this is one case when you can see sometimes price moving up or down from the exact level of support and resistance you already have. But again you can have situations like this also. So you have resistance here, again price moves up and has fallen from the same level of resistance, but again price moves back up and was not able to reach the level of resistance what you have drawn here, but has fallen a few points before hitting that level. We draw another line here, right? And we have this previous line. So now here onwards you got this resistance zone, and again price moves back up here. Again we see price has fallen few points before hitting the resistance level, so you can draw another zone here. So there can be, so you have this resistance zone, and next time again price moves back up and we see price reacting from that entire zone and falling back. So the advantage of modifying your first resistance level into a zone is that if you are not considering this level to make it to make this resistance as a resistance zone, or this level to make it this resistance as a resistance zone, then you would have missed this trading opportunity, isn't it? Because if you are still sitting with the first resistance line here and you are not drawing this and you are not drawing this from here and here, then when price came back up here and falling from here, you are not taking it because you are still waiting for the price to come back here and take and look for selling opportunities right here, but price doesn't reach over there, and it gave you a selling opportunities right before that. Price started its sell-off pressure right before hitting that particular level, isn't it? But if you already have drawn these two lines and created a resistance zone, then you are looking for any kind of selling opportunity which arises within this channel, and you will not be waiting for the price to come back hit this level only. No, if we have a channel with these three lines, then the moment price comes back up and hit the first level, we are looking for selling opportunities, we are looking for an entry. If it doesn't show there, still no problem because we have these two levels left yet. Then it may come up and show a selling opportunity here, you can still go in there. It can show a selling opportunity here, you can still go in there. So this entire resistance zone is a zone created by the sellers. Now here is a Nifty chart. So in Nifty you can see we have a resistance here. Price went up above that resistance and came back down, and it tested the exact level of resistance as a flip support here, right? But that was not the case here. Price went up from here, price went up from here, and when price again came back down and pushed up, it didn't fall to the prior levels exactly and pushed up a few points above the support level it already formed. You will have to consider this point to create a support zone here, right? So generally I draw it this way. So we have this point 1, we have this point 2, we have this point 3, which creates a support zone. So hopefully this support and resistance zone concept with this particular structure is clear for you, and I'll see you on the next lesson with a newer structure, and the newer structure name will be false break. So I'll see you on the upcoming Sunday webinar and in the WhatsApp trading group also. All right, till then, take care. Thank you.